Hey everyone, welcome back to Actual Investing, where I analyze companies on 4 metrics: revenues, growth, margins, and valuation. Today's a bit of a different video from my cloud computing videos that I've been doing because I want to talk about the whole fiasco with Farfetch and Coupang that's going on right now. So if you're unfamiliar with Farfetch, they're a luxury goods website, and they're also a platform for luxury brands to sell their goods all over the world. So essentially what Farfetch will do is reach out to, or they'll work with boutiques from all over the world, maybe a small local boutique in Italy, let's say, or Portugal, that doesn't really have an online presence, will use Farfetch to sell goods around the world. They're somewhat like a Shopify or an Amazon in that regard. Well, Farfetch has been struggling. They took on a lot of debt. This is a very, very highly leveraged company, and essentially they bought a very strange basket of companies, and now they have all of these weird unrelated subsidiaries and too much debt for them to handle, and they cannot pay it back. So what happened? Farfetch was somewhat acquired by Coupang, which is a South Korean e-commerce platform. So here's a little bit of a breakdown of what happened with the acquisition. Essentially, there was some speculation that Farfetch's CEO, Jose Neves, or Neves, I don't know how you pronounce it, was supposedly going to take the company private. He's a very wealthy man. He's a multi-billionaire. There was some assumption that he was going to buy Farfetch. That did not happen. What happened was Coupang is going to loan Farfetch $500 million, give them a cash injection that they can use to continue operations. In exchange for that loan, Coupang will acquire all of Farfetch's assets, and investors will not likely recover anything. As here we can see, Farfetch expects that holders of Class A and B ordinary shares and convertible notes will not recover any of their outstanding investments in Farfetch. Farfetch will be delisted and liquidated. So what does that mean for shareholders? Well, right now, Farfetch stock is halted. So you can see this is the New York Stock Exchange website. They're halted due to regulatory concern. Regulatory concern, I don't typically look at, when stocks halt. Typically it's because of a, limit up, limit down kind of thing, where the stock is dropping or raising too quickly. I have not seen this regulatory concern before. What I'm assuming is that as the shareholders are essentially getting screwed over, the SEC needs to step in and review what's going on before this can continue. We also see in Farfetch's announcement that it does say upon consummation of the sale that Farfetch holders will not recover any of their investments. There is a provision here that says should the sale fail to close or fail to close in a timely manner, there's substantial doubt about Farfetch's ability to continue as a going concern. So it sounds like either way, whether this sale goes through or whether it doesn't go through, Farfetch shareholders are not sitting pretty. So unfortunately, I'm one of those shareholders, a very small position, but I happen to own Farfetch. So we can see it was halted at technically 64 cents, but we can see that if you go in, you can look at the bid-ask spread is somewhere between 40 and 43 cents. So we're seeing a price of 42 cents, but nobody can actually trade their shares, which is unfortunate. So we'll see if trading resumes. But in the meantime, I kind of wanted to look at Coupang and see what kind of deal they're getting, see what kind of company they are. So Coupang, like I said, is a South Korean e-commerce website. They've been compared to Amazon in South Korea. They actually have offices in the U.S. as well, which is why they're New York Stock Exchange listed. As you can see, it's a rather large company. It's a $30 billion company compared to Farfetch, which at one point had a market cap, something crazy in the 20 billions, but now sits around 200 million, which I guess is more like nothing. Now you can see I'm a little bitter about that. But Coupang is a relatively solid company. So you can see here, I'm just going to pull up their revenues. You can see quarterly revenues have just increased steadily quarter over quarter, and they are, they do have positive net income, so they're not burning any cash, unlike Farfetch, which was literally lighting cash on fire. Not literally, but you know what I mean. And we can see that they have a nice balance sheet too. So they've got plenty of cash, about $5 billion. Sure, they've got debt, but they also have plenty of assets on the book, giving us a price of book of 10, which is relatively high, but I like that it's positive, and I like that their total assets are increasing. So let's look at my spreadsheet. So this is my disruptive investing themes. Here's Coupang at the top. We can see that they're a $29 billion company. The gross margins are quite low, which makes sense. They're selling physical goods. That's never the best margin business, but we can see that we're compensated for that with a very low price to annualized sales of 1.2. So you make up for the low gross margin in the low valuation. We see double-digit year-over-year revenue growth and very, very large annual revenues, which gives this a score of 12 out of a possible 20. No company has ever hit a 20. The highest in my list is 15. You get 5 points for having a lot of revenue, right? Because it's more difficult to grow a large revenue as opposed to a small revenue. You get 5 points for gross margins. If you have gross margins in the 90s, I give you a 5 because that's just pure profits at that point. Because the ARM has really nice gross margins. You get 5 points for a low price to sales, and you get 5 points for very high growth in the triple digits. So to get a 20, you would have to have 90% gross margins, billions in revenue, a 1 times price to sales, and triple-digit revenue growth. It's literally impossible. We'll never see that. And if we do, I'm going to invest in that company because, I mean, that's just not possible, right? So what do I think about Coupang and what do I think about Farfetch? Coupang, I'll probably look at this company a little bit more before I invest. I think they're getting a great deal on Farfetch, essentially for a loan that's probably not going to get repaid. So they're acquiring Farfetch, let's say. They're going to be able to sell a lot of their assets. Farfetch owns the rights to Off-White, which is a very popular streetwear brand that was founded, I should say, by the late Virgil Abloh. Very, very popular streetwear brand. Even now, as it's kind of lost some popularity, I think there's a lot of value in that brand. They own Browns, which is a fashion house, or I should say a fashion store. They own a lot of just little niche brands, and of course the Farfetch platform, which lots of brands rely on. Farfetch also owns a small stake in Neiman Marcus. It's just a whole mixed bag, but it all kind of ties into the e-commerce platform. So I think Coupang is getting an amazing deal. I'm really, really bummed for myself and for other Farfetch shareholders because it sounds like we're just getting nothing. I'm really hoping that this will resume trading so that I can dump my shares of this worthless company. Don't speculate on there being another offer. I don't anticipate there being a better offer than this for Farfetch. Jose Neves is really just looking out for himself here. He's going to take the best offer that comes along for him, even though he should be acting in the best interest of shareholders. He has clearly not done that. They chose not to report third quarter earnings, which was a massive blow to the stock. He wasn't able to take the company private, or maybe he didn't really try. Just lots of shady things going on at Farfetch. I can't wait to dump these shares. I'm hoping that I get more than zero. That's really my only criteria here. The lowest I was able to set a limit for is 40 cents in extended hours. If that sells, I will be ecstatic because that means I'll recover some of my money. I'm expecting to get pennies. I'm expecting to get maybe 10 cents per share for this because essentially this is a worthless company at this point. So don't rush into Farfetch thinking you're getting some deal if a sale comes along. That's extreme speculation. Play it safe and either hold and wait for bankruptcy or sell the shares and move on with your life. I'm not going to tell you what to do. This is not advice. This is just what I'm doing and what I think, if I were in someone else's shoes, what I would do there. So anyway, a little bit of a grim video today, unfortunately. Farfetch has been removed from my list. I'll look to swap these shares out for Coupang or something else I've had my eye on lately. I'll give you a little tidbit at the end of this video. I'm looking at a smaller company called NerdWallet. I just discovered that NerdWallet was a public company, and I think NerdWallet might make a nice little replacement. Like I said, they've got the 90% margins, which is good. They're growing revenues slowly but steadily. So I might look into buying some NerdWallet if I can get rid of these terrible Farfetch shares. Anyway, my condolences to anyone who owns Farfetch. If you own Coupang, great, you're getting a good deal. And until next time.